still have our traders. And Sarge, I know you're on the floor. You're listening to Howard. What do you think about what he said, that we may very well end flat for the year and that now's the time to buy stuff? I mean, are you seeing any flows into certain sectors right now?
You know, I've seen a few guys trying to nibble on the energy sector because it was down 6% earlier today. But I've seen that a few times now, and each time it has failed. But as you and I have, as I've been standing here, the S&P 500 has rallied 10 points already. We're about to challenge a technical level, 1857, that if we get above that, anything's possible today. So
yeah, can we see an intraday, folks? I'd love to see an intraday of the S&P because I think that Sarge is making a great point.
This day's changing right now.
No, we're moving the market here. We're moving it.
I think that's all Howard Lutnick, right, Mark? Mark is still at the CME, and are you seeing these types of moves here? And what about the futures? And what do you expect for how we anticipate the market may move tomorrow?
I mean, I think it's going to depend on whether some of these rumors turn out to be true. Because that's really, I think, been the big driver of buying here. And, you know, I'll be interested to see whether that happens. Obviously, the Fed's not going to do anything. I think the Fed should come out and say, we're not doing anything till the other world powers, China, Europe, lay off the monetary easing gas pedal. So if the Fed comes out and actually says, hey, we're not raising rates until the ECB and China stop killing their currency, I think that could be a precipice for a rally. But the one thing I would say for all traders, every time we've seen this type of trading pattern, you know, the V bottom and the V correction that we're all used to seeing, where we bounce right back, I don't think we're going to get that. I think you're going to have a real opportunity to buy on the way up as opposed to chasing a rally.
Right,
so this is a little different this time.
Yeah. Which is what Howard said. And Howard, I need to ask you, you still dollar bullish here?
You have to love the dollar. You have to love the dollar. Everybody else is going to cut interest rates, and we're just going to hold them steady. Man. And that means the spread's going to be there. The dollar's going to go through par against the euro. It's going to go through par against the euro. You're going to touch 90, and eventually you're going to see all-time highs for the dollar. It's just going to come our way. Our economy is just better than this is showing today, and it's just going to take some time. 2%. Look, it's just going to take. We're a 2% country. We're a 2% country.
Think about what Howard's saying right here. He's saying our economy is better at 2% GDP. That's pathetic. The market is up right now on a potential rumor that the Fed's not going to cut. It's not going to raise rates from a quarter point. That's pathetic. And here's what the market has to get their hands around. We've grown at 2% average for the last, 7 years, right? One of the reasons why we grew at 2% is because there was a boom in the oil patch, is because we had fracking, we had all this stuff involving oil and gas and oil companies. That is over now. Those folks are being laid off in droves right now. That's going to hurt the U.S. economy, and it's going to hurt the stock market. It has to hurt the stock market. When you have that combined with China slowing, I don't see why anybody would be buying stocks right now.
Aren't we bigger than an oil industry, Howard, though,
no.
for our economy?
I think cheap oil is spectacular for America.
How come it's not now?
Spectacular for America.
How come it's not now?
Because it makes no sense. You will see.
No, but why aren't people spending? What you're saying is counter to all the facts out there. The facts are there that people based after a massive tax cut, they're hoarding their wealth.
Well, I'll tell you
something.
why?
But you know why? You know why? Because the wages haven't caught up.
Well, we just got some breaking news.
0.25% interest rate?
We just got some breaking news. The Russell has turned positive, so somebody's coming in and picking up some names here.
The fact is, from my perspective, we are a fundamentally growing, slow growth economy, just like we were before. And what's going to happen is we're going to take off.
Before when?
What's that?
Before when?
It's steady. We have not shrunk. Nothing has mattered. Oil going down is not going to have our economy not grow at 2%.
Are you
We're
sure?
going to grow at 2%.
You sure?
Sure.
Are you sure that
I am sure.
One of the
I'm
biggest,
sure. In this TV show, I am certainly sure.
Howard, just remember what you're saying.
Market.
One of the biggest producers of jobs in this country is now in a depression, and you're saying that's having no impact on our GDP.
It's going to improve the United States of America. Cheap shipping, cheap oil.
Right here.
We will be here.
Keep your fingers
Yeah,
crossed.
I'm with
all
you.
of our fingers crossed.
But we love the volatility. So my company at least is busy.
Yeah, that's right. Cantor, Fitzgerald, and BGC. Is Cantor going public, and when? I always ask you that.
You know, BGC is public, and it's doing rock star
Cantor.
numbers. So
I said
we're
Cantor.
happy. You know, another day.
Why would you want to be a systemically important financial institution?
You just want to be
less
important.
That's what I'm saying.
You want to be important, but not systemically important.
Not on their radar screen.
Exactly. Well, Howard's always a gutsy voice. You ran in here. Thank you so much. you got stuff to do and people to meet with here in Davos, Switzerland at the World Economic Forum. Howard Lutnick.